Welcome back to Kryptolytix, giving a fresh take on crypto analytics. Today, I'm going to do a quick dive into the Bitcoin chart and see where we are right now, what the price has been doing recently, how we are on the edge of a potential dump, and how if we do not get a bounce right now, things aren't looking the best. So let's dive right into it. So, I mean, what more can we say, right? Inflation just hit 9.1 in the US. The predicted inflation rate was going to be about 8.8%, but we basically went up 0.3 more than what was projected. So that's not looking the best. At the very least, we'll probably get a 0.75% increase in the interest rates. And I guess, there was thoughts that this would probably be priced in already, but it's not really looking like that. We had a pretty big wick down. Now, I'll just quickly cover what I'm seeing, at least from a technical perspective, because, although this definitely has played a part from a technical perspective, it's broken and set up a lot of bearish energy to the downside just because of this wick alone. So what we can see here on the chart for Bitcoin, so I'll just bring this up. What we can see is it's not so visible on the Bitcoin chart. It's probably better. You can see it on the Solana chart, which is what I really follow the closest. But it's pretty much looking like a hidden bearish divergence. So what that means is we're getting a lower low in the price. So we'll just go from here to here, but a higher low in the RSI. So that is what's called a hidden bearish divergence, where we get lower lows and lower highs, and basically a higher high on the RSI. And what does that mean? If we're below the 200-week moving average, then everything we do should be basically bearish. So any rejections on any particular moving averages, so for example, the 21, which is the green one right here, the 50, which is the purple one right here, or even the 200 if we can get there. Any large engulfing candles that reject of any of these significant moving averages should be considered very bearish. We might get some relief back up here to this trend line, essentially. Basically, there is a very strong support here. We're at a resistance zone. So we can see below, we can look at the key Fibonacci levels, which I've got extended all the way out to the side here. So let me just pull that in. Basically the key levels that we have here, and this is measured from the entire cycle, from the pandemic crash bottom, all the way to the top. So these are all kind of levels that are very, very, very long term. We had a rejection of the 382, essentially, and we could very easily head to the 0.5, which is 16.261. If we do not hold this area and close get some significant closes above this support, essentially, and start to try at least to head back up to the 24k region or the 23k region or thereabouts, then things aren't looking the best. So heading back to the 1 hour, basically a hidden divergence with a strong momentum move bouncing off a significant moving average, for example the 21 or the 50 under the 200 would be considered a strong bearish move. And then you couple that with a hidden bearish divergence, from a purely technical perspective, it's very bad news. So maybe we'll try to get back into this trend line here, which was basically, this could be considered as a retest, I suppose, of this trend line. And if we have a look and see where this trend line dates back to, it's all the way back here at this big dump here at the 17.8k level. If we can't get back into this area up here, then we're probably looking at a dump back down to some of those levels. And we really need to be watching to see if we start to break some of the structure here, because that there and I would say here as well are regions where if we don't kind of bounce off here, or if we just maybe we come down here and then basically come back up to retest the moving averages, they come down and then get rejected again, then this is kind of the typical sort of price action that we get off these moving averages, which, as you can see, are pretty well respected. So the 21, you can see it's a bounce, bearish candle, engulfing, and then we just keep heading down. A retest, bearish engulfing, then we just keep heading down. Consolidation, test, bearish engulfing, second attempt, and then basically we just come down. And then here is kind of the confirmation of the bear trend here, I suppose, on the hourly, because the 200 hour moving average is the blue line. So this is kind of where the momentum really picks up in terms of the bearish energy, and above is basically bullish. So, you know, bounce up to 21 and then we go up after a bullish engulfing candle or high momentum candle right there, for example, on the other side. And then we come back to test it and then reject, bullish engulfing, so on and so forth. Very big momentum move there. You know, these are the typical long points. And here you're basically looking for short positions to take, especially below the 50 line on the RSI. So it's not looking good. Love to sugarcoat it, but yeah, it's not looking amazing. But we could just consolidate here and then test the 21 again. But if we get another bearish engulfing candle or a 3-line strike or some sort of high momentum candle, like something like this, off a rejection of any of this trend line here, which we did break out of temporarily, and then we tested the 50-hour moving average, and we were very heavily rejected off it. In fact, we even started coming up to the 200 period on the 15, but as you could see, there were just too many resistance lines above, and these are just support and resistances based on wicks from previous price action, and we just kind of tried to get above this 100 period smooth moving average, essentially, which is the purple one here, and then just basically rejected. And that just kind of correlates and coincides with the start of New York session, because the London session seemed to have some nice sort of moves up. Europe didn't seem overly bearish, to be honest, but then as soon as New York session opened, then things really took a turn for the worst, and that I think would be paired with the inflation figures there. So here is the New York session time. There's the pre-run there, and that's the start of New York session, as you can see. Right on the start of New York session, that is basically that massive candle to the downside. Now, I think right now what we're trying to do is we are doing a classic sort of consolidation and retest. I feel like we're going to retest this moving average here. And this is me looking on Solana. I forgot to mention, because it seems to be a bit easier for me to work out where we're at in terms of the Solana price action. It can be translated to, I guess, any coin, to be honest, at the moment, because Solana had a very obvious bearish divergence on the 15-minute, and the hidden bearish divergence on the 1 hour was a lot clearer on the Solana chart, which is what I've been watching. But I feel like we're going to basically retest the 21 moving average. We're well below the 200, so if we're trading with the trend, I suppose, then what we're doing is we're considering moves to the downside. So at least for Solana, I'm thinking of the 0.618 Fibonacci, for the moment sitting about 31, and then potentially even lower down at the 786, which is 28. And these Fibonaccis are measured from that wick down the bottom there to the top here, basically the most recent top. So that's kind of the most recent price action, the most relevant price action right now. So these are kind of the levels that I think a lot of traders will be watching. There'll be a lot of bids at these levels, so I'm hoping that those will act as some sort of support. We have broken this trend line here, unfortunately, and this could be considered the retest right here. Excuse all the lines. This chart is my scalp trading chart, one of them, so I don't really look at it on the daily, but those are all just basically levels measured out on the hourly chart. So we could definitely be heading down lower to this region down here. I feel like we'll get a little bit of consolidation first before heading down further if we do, but we are definitely bearish, and it's not looking amazing. Quickly go over to the Bitcoin chart, and as you can see, we never quite got to the 21. You could call that a rejection if you want. You can go to the 4 hour, and the 4 hour 21, you could say that the 8 hour 21 was, I guess, tested. They tried to hold, the bulls tried to hold above that level, and as soon as we kind of got that first bearish engulfing candle as a rejection on the 8 hour, that would be considered a long-term, I guess, swing trade down to the next level, which would probably be so what we could consider here on the 8 hour chart as the 21 period moving average on the 8 hour. We can see a very clear rejection off the 100, and basically this would be consolidation, so you probably wouldn't really trade necessarily, but as soon as you get a large momentum move outside of the 21, which is here, that would be considered as bearish momentum to the downside essentially. But as you can see, we're pretty much, but if we quickly measure up a Fibonacci retracement for the most recent price action, we could very easily head down to the 786, which, let me just clear this one off, level, which is about 18,536, maybe accumulate around there, and then hopefully create some sort of double bottom pattern, which would be this wick and a wick here potentially. We are at the 618 right now, trying to hold that as support, but it's looking a little grim. We are below the 50 line on the moving average, and we had this bearish engulfing candle right here. Not amazing. Looking over here on the Madrid bands, we have been pretty bearish on Bitcoin since this structure up here on the 11th. That's kind of the first proper structure created within the Madrid bands as soon as we flipped. Kind of like the Madrid bands, if there's a proper structure on the opposite side of the Madrid bands, then we can basically consider that as the beginning of this trend, and it strengthens as the top line gets red, because that's when all of the EMAs have flipped in line with one another. So we've basically been bearish since here. I was unfortunately away from my computer at the time, so I didn't really get to do anything on this day, but I have been basically trading rejections of the 21 period smooth moving average on the 15-minute on Solana going down, but some strategy that I will cover in the future. But for now, we're just kind of looking at the macro, and basically we can see we're definitely in a very strong downtrend. We did start to break through some of these, but you know, we're looking at a massive rejection candle here. And basically the way it kind of works is, yeah, you get a big engulfing candle or a 3-line strike or some sort of candlestick pattern like this, rejecting off moving averages. And as you can see, we kind of rejected off the top of the Madrid bands, at least 1 or 2 bands from the top, then, you know, getting pushed out back outside of the bands. You know, this is basically, you can see we just had a rejection now off that. If we get a bearish engulfing candle off this line here, then we're basically looking at more moves to the downside, unfortunately. So the only thing that kind of gives me hope at the moment, and that's not going to be very helpful in the short term, is we have the Pi cycle bottom flag on the Bitcoin chart, on the macro Bitcoin chart. And to be honest, this is kind of when I plan on starting to buy back into the market. I'm going to do a bigger video on it soon. I started doing a video on it before, but then I saw that massive candle to the downside, and I was just like, well, I got to change what I'm doing now and cover this. But this is where the flag printed last time. You can see a candle there and a bullish engulfing candle that invalidated this little candle here and validated high cycle bottom, where we entered the accumulation zone, where we didn't have crazy inflation back then, so unfortunately it's not as helpful. We also have this big candle to the downside with a capitulation wick. You can see here on this candle, and then we started to recover, and then we had the same sort of deal again, and then we started going up then. So again, this is kind of what I'm looking at. This is kind of the only bullish thing I can really see, to be honest. So, and this doesn't close, this flag will not print properly until the candle close, which is the week end. So I think at this stage, these moving averages have just crossed regardless, because the red moving average, which is the shorter term moving average, if anything, it will just come down harder, and the longer term moving average will just taper out even slower, so it'll just be a harder cross essentially. So again, I'm going to do a proper video on this again soon, but yeah, I just thought I would quickly touch on that, and that seems to be like the only bullish thing I can see. I guess the other bullish thing is the fact that this is a huge demand zone. There's a lot of buy orders here in this entire pocket. It's a very large area, but there's be a lot of laddering in, I would say, of larger positions, but we really do need to hold these levels right now, to be perfectly honest. But I just feel like we're probably coming into a retest of like the 21 period on the 1 hour, or the 21 period on the 15-minute, or one of these trend lines here. Probably not this one. I would say potentially this one, because we have 2 touches at least. Maybe we just come around here, continue consolidation, come up, test here, maybe we just keep going down. Who knows what's going to happen in the short term? Like, nobody does, at least in terms of prediction, but we can always look at what's happening right now and act accordingly. So that's why you've got to watch these very important levels and act like this, essentially. So yeah, just quickly coming back to the 15-minute, what I'm personally looking for, and I'm looking more at the Solana chart, but I just thought I'd bring up the Bitcoin chart, is, you know, we've got this potential little attempt at a recovery. Here's our 21 period moving average. If we get a big 3-line strike or a bearish engulfing candle out of this range, essentially, then we're pretty much looking at a move down to 18.5, where I feel like maybe we'll consolidate here again as this moving average comes down, like something like this, and then maybe we just get rejected again and then move down to the next key level, and then we maybe break structure and then head down even further, or maybe we recover, which would be amazing. And I would love to spread the hopium and say, yeah, we're going up, it's all good. But unfortunately, I'm a bit more of a realist, so I'm just kind of looking at things the way they are, and we're below the 200 period moving average on the 15. I'm bearish. That's just how it is, until we form a trend reversal where maybe we kind of go sideways, maybe try to recover and then come back down, and then form a higher low on the RSI, creating a bullish divergence or something along these lines, then start to kind of tear through the moving averages again. I think that's the only time I'll start feeling bullish again. Once we get above this 200 period moving average, especially in the 1 hour, then that's kind of when I'll start feeling a bit more bullish. But right now, where we are, we aren't that close to it, unfortunately. And we did have a very solid rejection off the 21 right here. Also a TDSS 9, which when things are bearish can result in kind of price action a bit like this. So yeah, just to recap, basically we have the rejection up to 21 right here. We have a hidden bearish divergence, which means we are lower highs and lower lows, but we are higher highs on the RSI. This is a hidden bearish divergence. This is a very bearish sign. So from purely technical analysis perspective, this is generally a sign that we just are going to keep going down. That's purely from technical analysis. And from what I've been watching, the probability of this resulting in lower lows is much higher than the probability of us just making some sort of crazy recovery back to the upside. So I guess prepare yourself for the worst, I suppose. But hey, I mean, this will present some decent buying opportunities, especially if you've got a DCA strategy. So maybe that's not a bad thing. But if you are tied up in any lending and borrowing and anything crazy like that, where you're borrowing against your collateral in a money market, then I recommend right now thinking about what you're going to do to look after yourself. Because altcoins, if everything does come down, I'm not saying it will, but the probability is higher that we do, then you'll need to be protected from that, as your collateral value will drop and we may break structure and then form a lower low. So I can bring better news. I was in the middle of a pretty fun video with the Pi Cycle bottom indicator, but I mean, you know, inflation figures came out and the market just dumped. So I figured, hey, I should probably release a video just giving a bit of a analysis on what I can see in the market. High probability that we go lower, small probability that we go up. If everyone's really bearish, then there is definitely a chance we can go up, prove the bears wrong, then maybe reject off some levels a little bit above, and then just continue on back down to the downside. We don't know what's going to happen in the short term. We just have to watch each candle as it prints, which is what I do, watching 5-minute, 15-minute, 1-minute candles because I'm crazy. So anyway, hope you liked the video. Please like, comment, subscribe. Remember, none of this is financial advice. I'm just giving you my analysis in the market as quickly as I can and releasing it out so you can see what I see and hopefully act accordingly. Remember, the Pi cycle bottom is about to print. It will print next week, which is a pretty exciting time for me because that's when I start planning on buying into the market, which sounds insane to say right now after we have all of this bearish news, but this is just my strategy. I buy Pi cycle bottom, I sell Pi cycle top. Generally DCA because we usually have an accumulation range around the Pi cycle bottom, so it means that there's time. So even if we keep falling down, it's better just to start DCAing back into the market. And then when we start to approach the Pi cycle top, then start to DCA out because it's very hard to catch a top. It's very hard to catch a bottom. It's always much better to trade and work with breakouts and other kind of lagging indicators that confirm the price is kind of recovering or doing something along those lines. Anyway, keep safe out there. Take care. All the best. This is Kryptolytix signing out. See you later, guys.